Hey you guys, I haven't done a YouTube video in a while. Been super busy trying to get this course launched, which again it's been delayed, but there has been an internal release, you guys, that I'm going to be doing shortly with the Discord members. There are people that want to start learning my material in order, so I'm going to be releasing the course to the Discord members in phases, and then I will be doing a live public launch. I will be announcing soon, guys, the pricing. I have announced it in the free Discord channel. However, I haven't announced it publicly to YouTube. There's going to be a promotional price, and then there's going to be a regular price after 2 months. There's also going to be a discount for any Discord member currently. So if you are not a Discord member and you decide to join, there will be a discount for the course for those members. But with that all being said, you guys, I'm still seeing people take losses because they're still taking reversals. And I did a video, you guys, maybe I don't know, a few weeks ago now, about SMC and your expectations and what people are doing. And effectively, you guys, what people are starting to do, it seems, because you have to understand that the original kind of SMC, smart money concepts, in Forex started talking about order blocks, okay? And it started talking about this concept where price goes up and then it creates an order block, and then everyone's waiting for price to come back up into here and then trade it, and then wait for price to come back up into here and trade it. And that definitely works in terms of block flow. Okay. However, what is happening, I think, is that people on the higher time frames are seeing price do this. They're seeing each of these zones be order blocks, and then they take a short and it goes like this, and then they take a short and it goes like this, and they take a short and it goes like this. And it's this classic case of people online are not understanding market structure. Okay. And I'm gonna do this video, you guys, on the lower time frames, and then we can use the higher time frames as confluences. But people need to understand structure, you guys. And if you go back and watch my videos on YouTube, I tell you guys very, very specifically that if price breaks structure, the reality is that more times than not, on the higher time frame, guys, these areas are going to cause retracements and then go, retracements and then go, and then retracements and then go, and then it's going to melt. Why? Because this entire trend is a trend line full of liquidity that has to get mitigated by the institutions. You do not just have one break of structure for the most part. You do not have just one break of structure and then it goes. Yes, you can absolutely have that on lower time frames because it's called internal range liquidity. But if the higher time frame, like the 4 hour, is creating a trend and it breaks, it's gonna start to mitigate, and then the daily is gonna have its supply up here, and then it's gonna start breaking down. And so we need to. I can't say this enough. We need to get away from trading the left other than confluences for the actual structure. So what do I mean by that? Well, if price, guys, creates a lower high and then a lower low, well, then if you are starting to create market structure this way, you can be buying these demands up to the supply. And then you can be looking for your order flow changes to short back down. But if price decides to break this structure, then you would expect this to be liquidity now that we can then buy to take out. And then if price reverses its order flow, we can look to short back down into the area that takes price. And then we can look to, again, buy. And then as price breaks overall structure, we can then look to short from the supply zones that caused the break. So we need to be understanding how to flow with price and not be doing stuff like this where every single thing to the left, you guys, is a POI that you guys are shorting from, because it's just not going to work out. It's not going to work out unless you guys understand what the higher time frame is doing as well as just structure in general. Okay, so let's go through some examples, guys, on the lower time frame of what people are most likely doing and how we can start to understand our expectations of our trades. And it's, guys, it's about having self-awareness. It's about understanding when you take a trade. Do anybody who's watching this YouTube, do you even know that you're in a retracement? Do you even know that you're in a pro trend trade? Do you even know where you're at? And I would probably guess that most of you don't. And that's not to be critical. That is just to say that most people have no idea what it is they actually are trading. Are they trading a pro trend continuation, or are they trading a retracement? Are they trading a reversal? They don't know because they think every POI is going to reverse. Okay, so let's go through some price action, guys, on the 15-second, then we can go on the 1 minute, etc. And the whole point of this exercise, guys, is to understand where price can go and how it's creating its internal structure against the higher time frame. Okay, so can we clearly all agree that this is a bullish market structure? All right, so we can clearly see, guys, I'm just going to change this to not dots, sorry about that, and maybe I'll make this yellow. Okay, so can we clearly see, guys, that this here is making higher highs? Okay, it's making higher highs, right? Now, this is the 15 structure, or 15-second structure, guys. So in each of these instances, when people are seeing these chalks, they're thinking, "Oh, this sucker's melted. This is melting." But what we're failing to understand is how the overall market is framed from a higher time frame. And in the group, guys, I'm gonna talk about some things that I talk about in the group, and that is that pullbacks with continuations are order blocks. Okay, what do I mean by that? Well, if you think about price, if price is going up and it pulls back and then it goes up and then it pulls back, this entire pullback range actually on the higher time frame is an order block. So if we go to, guys, these impulses and you look at this entire structural zone, okay, this entire structural zone, if we go to some other time frame, okay, let's go to another time frame, you can clearly see that these actually formed order blocks that then take out new highs. So when price comes down, you guys, into these from a retracement perspective, yes, it's changing order flow. Look what it's doing. Look what it's doing. It's taking out the bottom side wicks. So if it takes out the bottom side wick, from a lower time frame perspective, you guys, you can be looking for your lower time frame short opportunities. Where to? Well, it's always to where I teach you guys, where it's the sell to buy, or the area of interaction between buyers and sellers. So for instance, if this here is supply, okay, if this area here is supply, okay, why, Kyle, like, why is it supply? Well, it drove price lower. Okay, it drove price lower. It created, right here, it created basically a higher high, drove price lower to create a lower high, and then price ends up ranging here, and then boom, takes off. Well, what does it do? Okay, it created this, basically, it did take out this wick, and then you did have a order flow shift here. And what can we look at? Okay, well, where is the sell to buy that took out this wick? Okay, why does it matter? Why does it matter that that wick got taken? Well, that means that the price action, you guys, created new demand right here. Okay, and if we go to the lower time frames, it's very, very obvious, and it's very, very clear to see, you guys. Sorry, I lost my spot. I'm going to put this in replay mode so this doesn't jump again on us. Okay, it's very, very clear to see, guys, as you start scaling into price. Where is it? There's an order block there. There's an order block there. And why does that matter? Well, that matters because, you guys, if you're not putting the pieces together, this drop-based drop was supply. This was an order block that drove price lower, and it drove price lower than these two order blocks. Therefore, there's a lot of sellers there. Well, what happened? This created selling pressure, but it was mitigated, and boom, buyers stepped into the market, breaking previous supply up here. What does that mean? That means that there are buyers there, you guys. It means that there are buyers there. You've made a higher high. So all you need to do as a trader is find where the buyers are. That's all you need to do. And then you can find where the sellers are. So for instance, as price is starting to create its higher highs, can you look for reversals? Sure, you absolutely can. However, if you don't know that you are in a reversal, if you don't understand, for instance, that this area of price, okay, created a higher high, and if we go to the left, this area took out a high, okay? It took out liquidity. Therefore, you would expect a retracement. Okay, we would expect a retracement. Okay, it's actually pretty easy to spot. So let me put a dot here for a second and put this in here. Now, if you were to go down to the lower time frames, what can we start to do? Well, if you look at this price action, guys, price did indeed take out this wick. So this range, okay, this range got broken, and on the 5-second, 15-second, etc., these would be valid trades. So how do you get into these? Well, all of a sudden you can start to see that we are creating liquidity. We have order flow shifts. We have rally-based rallies that get taken out. We have order blocks being formed. There's ways to enter this, and I'm not going to go through specific entries because I teach that a lot in the Discord. I do teach that a lot in the YouTube, but I want to teach about price action, okay? And so what can we start to formulate, and how do we understand where we can be taking our trades instead? Yes, you can look for each one of these areas for your reversal trades, but look what happens, you guys. You create a higher high. It retraces. Of course it does. It retraces to the order block that was unmitigated that sponsored the high. Okay, it sponsored the high. So if we go here, and I already showed that order block, but let's start to go here, okay? This area of price, okay, doesn't create a higher high. However, it does create a retracement, and then boom, we have a massive amount of volume that creates a new high. What does this create, you guys? It creates an order block. What can we look for? We can look for the areas of interaction that were responsible. Where is the responsible price that actually took out the supply? Mark your supply, okay? I'm going to mark my supply right here, okay? And where is my buyer and seller interaction? Okay, where is my buyer and seller interaction? Right here. Price comes up, boom, mitigates, it creates a chalk. We can buy off the flip zone, and now we're in a pro trend trade that's running absolutely amazing. Okay, so instead of looking to the left, you guys are looking for all these reversals when we should be focused on pro trend trades. Okay, so let's go through some price action here for a second. Okay, and these are some trades I took today, so I'm not going to be talking about those. Let's go through price. Okay, let's go back to the 15-second, you guys. Okay, we're just going to go through this price action. Okay, so what do we have take place here? Now, timing of the session is important. Timing of the session is important because price will do some silly things around the market changeover. Okay, so we have to anticipate that. But let's just map these things out. So we're making higher high. We did make a higher high here. We created relative equal highs. Okay, and what happens here? Okay, what happened here? So people are thinking reversal. Okay, people are thinking, oh, we're reversing now. Okay, well, if we actually look at market structure, all market structure did is create internal liquidity, and this is your last, guys. This is your last major high or low that was responsible for a high, right? So in terms of the range of price action, price is allowed to go here. If price were to have broken this structure, then you would be probably looking for some sort of short off the area that sponsored it. But it failed to go lower than that low. Therefore, it's valid to be still looking for longs, and we can start to look at our pro trend confirmations. How do we do that? Well, let's start mapping out structure. Okay, so if we have this area of distribution, okay, this area of distribution that causes multiple pullbacks, we have a chalk here. Okay, we have a chalk here that then gets retested in the flip zone. All right, then we have another break of structure. Well, let's look at this price action. Okay, so this price action was your last. Then price goes to your last lower high, lower low, higher high, higher low, higher high, higher low, higher high, and we're starting to now create bullish pressure back up into the area of mitigation. So the only thing you could ask yourself is, what is this going to do? What is the origin of this move going to do, right? Everything else inside of this price action, you guys, is internal range liquidity, all right? So as we're mapping out our structure, we're noticing that we're still creating these higher highs off of demand, okay? So we would be looking for areas to buy from. Now, what do you expect when you make a higher high? Well, you obviously expect a pullback. Now, this price action here is mostly garbage because this is the market changeover. So, you know, you got broker manipulation, spreads, and all that kind of jazz happening here. But what ends up still taking place, right? We still start making our higher highs and we end up absolutely crushing up to the upside. So let's go through this price action here. If your price action, you guys, in terms of the higher time frame, you know that this accumulation area is an order block. Therefore, your range of price action in terms of bearish and bullish can do anything it wants inside of this zone. So if you understood that and you start to break down these trades, and this actually was a short I think I took last week, I recall this price action, we start having our order blocks or our demands fail. So we can look for areas that sponsored that failure and absolutely take shorts. Where can we take shorts to? We can take shorts to premium discount of that actionable leg, okay? So if we put our game box here and we start looking at price, well, where is the area that sponsored the actual change of order flow? So I would have marked, personally, I would have loved to see price come down here, and we'll have to look to see. I would love to see price come down here. Why? Because this area is unmitigated from the area that actually took out the high, so that makes sense in terms of our flip. But price ended up coming up to this next zone here, and then what does it do? It starts to break structure again. Okay, it starts to break structure again to the upside, and then what does it do? It takes out more highs, creating more flip zones that were responsible for those highs. Therefore, we can look to buy again. And you have to keep in mind, guys, this is the lower time frame. This is the 15-second chart. So, like, if you're taking these trades, these are good trades. That's a 1 to 6 RR trade to make a new high. They're massive moves in very short periods of time. But now what takes place, guys, okay, so we have our last higher low of this structure right here, and we have a higher high. Price breaks this structure. So what can we anticipate? Well, realistically, price will probably distribute to here. So we can be looking for price action to now start to tell us it's going to short to there, and you can clearly see now price starts breaking structural highs or lows. Therefore, we can look for our flip zones to be shorting down into these areas. We don't know that price is going to go lower than this accumulation area. You don't know that at the time of this live price action, but based on the overall price action forming, you can surmise that we would absolutely have probably a retracement into this zone if price starts to break down this last accumulation that made the high. That's where price is going to start to make our patterns, you guys, of our change of characters on the higher time frames. Okay, that's how we can start to look at this price action. So when I'm teaching, or when I'm teaching people how to get into these trades, or I'm taking my own trades, I'm looking at, guys, the higher time frame accumulation and distribution areas. Okay, so again, if we were to look at this price action here, right? If you look at this price action here, nothing mitigated this price action, right? Nothing mitigated this price action. So if we actually go to some sort of higher time frame, do we start to see where we actually might have demand? Well, for sure. Like, I mean, obviously this wick has demand in it, but this wick was a broker manipulation from the market changeover. Okay, but we do start, let's flip through other time frames. Okay, so I would have absolutely said, regardless of whether or not there's an OB here, now if we go to an even higher time frame, I would have been marking this sell to buy. But let's put this in replay mode here for a second, and let's mark some other time frames. Okay, So on the higher time frames, what do we have? We have an order block here, and we have a sell to buy that made a new high. Therefore, there absolutely is demand there, guys. Why would I care about that demand? Well, I would know that it was responsible for taking out this liquidity. Therefore, you're probably going to have a move, and you ended up having an 18 pip move. Now, what do I teach in my education? Also, how can we spot higher time frame reversals? Well, reversals, guys, I tell you guys to look for your fair value gaps, okay? And guys, if I'm moving too quickly here in this video, you got to put it in slow motion. You got to replay it. Again, my course will cover all of this stuff in bite-sized pieces of information, but I'm trying to get a point across in that's can be complicated, but I don't want to be doing 2-hour videos on YouTube. So just bear with me here. So we have a fair value gap, you guys. Price comes into it. What does price start to do? Well, price starts to take out the wicks, okay? And I've told you guys many, many times, as price is making an uptrend, it's going to respect the bottom side wicks. As price starts to reverse or warn you of reversals, it's going to start taking out those wicks because those are the lower time frame, lower highs. Those are the trends of the lower time frame. So when we map these structural breaks out, guys, I tell you that when these things start to happen, you are creating supply on the extreme or the flip zones, okay? And your flip zone in this case here, guys, would have been this, which didn't give you much of a trade. But also, what do I tell you guys? Look for the fair value gaps to get filled. And we have a beautiful fair value gap. And then again, you could be looking for your wicks to go. And then you could be looking for your buy to sell continuation flip zones. And as you can see here, this buy to sell got respected. Why does that buy to sell matter? And honestly, guys, all of these buy to sell zones got respected. And you can look at these areas of interaction between the demand zones. So this is a 15-minute chart. So this wick forming this new high here created a buy to sell. So these are absolutely new supply zones that took out your demand zones, okay? And they got respected. Now this was a London, New York manipulation to take out this imbalance here. So if we actually go to a higher time frame, guys, there is unmitigated price, and that's why price came up here, and then it just kept tanking. And that's what happens during New York or London sessions. I teach the group that. So all we need to understand, you guys, is that on the lower time frames, as price is starting to make its structural changes, okay, structural changes meaning, okay, we have a bigger structural change here with this break from this high up here, we can start to look for selling pressure. And actually, I did take this sell last week as well. I posted this to the group. I took this sell right here. And this one was a really nice sell. I actually took it to this low here. And this was a really nice sell. And again, why would I take that sell? Well, I knew that as price is distributing, it's going to mitigate this. And from here with a 2 pip stop loss, from this price action here with a 2 pip stop loss, down to here is a 1 to 7 RR trade. The rest of this trade was basically a runner to see if we take out that low. Okay, and I teach the same thing to the group, guys, is how to understand that if we've made structural breaks, if we're breaking down structure here, and supply is holding, okay, and supply is holding, then we can look for our short opportunities to mitigate the imbalance that's down below here. All right, so if you learn to map structure, guys, if we learn to map structure, you can start to do this over and over every single day. And these were 2 trades today that I took. It is June 6th. I took these trades, again, structure. Remember, basically your lower high, lower low, lower high, distributed. I took this. I'm not going to explain over this call. I should have held it lower, but my TP got hit so quickly. I got 1 to 5. This trade basically lasted literally a 1-minute candlestick. And this netted me 5% on my account in one 1-minute candlestick. And I didn't have time. I was marking this trade out for the group, and it hit TP before I could really close it or move it. And then price ended up coming up to take out these relative equal highs here, and then I shorted to create a new low. So, I mean, these trades, guys, was block flow from a higher time frame mitigation downtrend as price is starting to what? Come into my higher time frame supply zones, and we can look to short back down into higher time frame demand zones. Okay? So, I hope this is helpful. I know this is a quick video. I want you guys to be thinking about market structure and how you can look at price, just like these buys and sells. We create a new low. Can we get a retracement? And we ended up getting a retracement where? To the unmitigated area that sponsored this new low. Can you get lower time frame trades? Absolutely. These are massive, massive trades, you guys, on the lower time frames. Like the 15-second trades, guys. I'm telling you, these things are... These trades can pass challenges. These trades can make your accounts grow exponentially if you learn what to look for in terms of just higher time frame structure while trading the lower time frames. Like you can compound your accounts, you guys. And I'm probably going to be doing a YouTube video next week on compounding and how to grow a personal account, how to potentially properly use a funded account if you have one. Because funded accounts, guys, can help people grow a personal account. But I'm a huge advocate for people to grow personal accounts because you can trade with 100% equity of that account size, and you don't have to worry about the prop firm's daily drawdown rules that, in my opinion, if you're trading a personal funded account, you're trading 1%, if you're 3 or 4% down for the day and you're trading 1 to 5s, one trade can get you back in profit as long as you know what you're doing. And I'll be doing a breakdown video of that coming up this week for YouTube. I hope that was a little helpful for people in terms of your overall understanding of price action. I know this is going to take time for people to learn these things, but I wanted to stress that the left, you guys, the left isn't going to cause your reversals. As you can clearly see in almost every instance, these areas of price cause retracements. The areas that start to reverse are areas that sponsored price lower, and then we can look for our actual price action to take out structural lows or take out accumulation areas that drove price higher. Like these areas here that drove price higher. When these start to break down and these start to break down and these start to break down, we can look for our short opportunities to take out these lows, because that is how the Forex market starts to work, is that as the structure changes, it's looking, guys, for its buy side or sell side liquidity so that it can keep going in its direction, and it's not always about these massive reversals. And I think there's some people that still think smart money concepts, guys, are going to get you 1 to 50 and all this stuff. And yes, it can. But I'm telling you, if you think you're going to hold a 1 to 50 RR trade full lot size, you're kidding yourself. I shoot for 1 to 5 2 times a day. I look for 10 RR per day. That is a ton, you guys. That is an absolute ton. That's 50, 60 R a week. Okay, you don't need to be shooting for the moon on every trade. I tell the group, if you guys can do 1 to 3, 1 to 5 RR trades per day, you can get 15 to 20 RR per week. That means on a funded account or a personal account, you can be doing 15% a week. But you don't need to be greedy about how you're looking at every one of these reversals. If we start to partial out or we manage our trades at demand zones that pushed price higher, and we can then short to there and we can long to the next one, short to there and long to the next one if you want to hedge. But I would say that most people should just be buying as price is going higher, or as price starts to distribute these lows, look for shorts back down to take out the next one. And that would get you pro trend trades versus constantly looking for a buy here, buy here, buy here, buy here. If I would have done that today, sure, I could have had a couple, I would have had one winner, I would have had maybe a partial, I would have had a loss, and then I would have had maybe a winner. But these ones, you have no idea, guys. You have no idea what ones to the left will cause that, versus if we trade our unmitigated block flow down with the higher time frame, it's a little more probable from an edge perspective to be getting sell. If you looked for a sell here, there was absolutely no sell there until price told you it wanted to go lower. Then you look for your sell, and then as price makes its low, you look for unmitigated distribution, sell. If this one partialed out, you could look for a sell. This one would have still been a really nice trade. So I'm going to leave it there. I hope that this was helpful. I hope that you guys got some value out of this. I'll be doing more videos as I get my course out. But yeah, I hope you guys have a great rest of your week.